quota set by the Department of Transportation, and it's a one-stop shop. So Paul, you're already open to come over to the Philippines without requirement of your visa.
Okay,
That's for the travel advisory, a bit of a good news in there. So you will be welcome in the Philippines by 10th February 2020.
Okay.
Today's episode, we will discuss on Philippines' economic recovery and growth post-pandemic. And we have Securities Exchange Commissioner Attorney Kelvin Lee, together with the Economist and Vice Presidential Aspirant Manny SD Lopez. Kaya dyan lamang po kayo at huwag bibitiw. We'll be right back.
Labmodal manufactures a highly distinctive and exclusive range of interior solutions that combines functional excellence with design appeal. Solutions with integrated, innovative, ergonomic features to well-designed workplaces. Our company is based on the inherent values that shape the core of who we are. It is through our living values that we continue to fulfill the promise of our ideal and environmental design standards. Each and every groundbreaking product we've introduced over the years has been the result of our team's hard work and dedication to provide our absolute best to who we care most about, who is our customers. Whether the job is big or small, our team is used to solving complicated tasks and makes sure to get projects to successful completion. Whether it is local or global. This is why Labmodal is known as one of Europe's leading manufacturers of innovative system solutions for devices used in laboratory facilities, hospitals, and educational facilities. Solutions that can be easily adapted to the growing needs and workflows demands of the future. Labmodal, designing safety.
Welcome back to Boracay, the peaceful oasis where lasting memories are weaved. As the Philippines slowly reopens with care, the island paradise is now ready to welcome more local travelers. The Better Boracay. Indulge in the new, clean, and safe haven. With strict health and safety protocols in place, you can leave your worries behind. Where only certified establishments operate to let you stay, dine, and play with a peace of mind. Experience hospitality with the utmost consideration and care. Spend quality time relaxing on the world-famous white beaches. Wake up to a better Boracay. Welcome back.
It's more fun in the Philippines. Bakit palalayo? Sobrang swerte kaya ng tsinelas mo. Nakatapa ka sa paraiso. It's more fun in the Philippines. Bakit palalayo?
For your hospital, chemical storage, classroom interior design, school furniture, storage units, fume covers for schools or hospital system cabinets, you may please get in touch with Labmodal via email at info@labmodal.com or visit the website at www.labmodal.com. Welcome back, and you are still watching with us live here in the Filipinos World. The Philippines aim for a matatag, maginhawa, at panatag na buhay ang bisyon natin for 2040. A must-watch video from the National Economic Development Authority. Let's watch this.
Matatag, maginhawa, at panatag na buhay. This is the Filipino people's collective aspiration. We have been working to turn this into reality for every Filipino by 2040. Unfortunately, in 2020, our lives have been disrupted by the unprecedented impact of the COVID-19 pandemic. Yet this crisis has only motivated us more to rise to the challenge. After all, our aspirations remain the same and have become even more pronounced today. But we may have to take a different course of action as we deal with the new normal. Now, more than ever, a whole of society and a whole of government approach is needed to overcome this health crisis and get back on track. Led by the National Economic and Development Authority, the government updated the Philippine Development Plan or PDP 2017 to 2022 to enable the country to effectively respond to the COVID-19 pandemic, quickly recover, and then transition to a new and better normal. The strategies have been made more responsive to current, emerging, and future needs and challenges in different areas and sectors. We aim to be better prepared and more resilient to any kind of disasters. The updated Philippine Development Plan remains true to the socio-economic agenda of the administration and takes account of our international commitments, including the 2030 Sustainable Development Goals. More importantly, it continues to build a strong foundation for Ambisyon Natin 2040. In the first 3 years of implementing the Philippine Development Plan, several targets were achieved, and some were even surpassed. We were able to pass landmark economic, social, and governance reforms for much easier and faster delivery of services for the most vulnerable groups. Significant reforms have also been passed to ensure that our tax system is simpler, fairer, and more efficient, and that we have enough revenues to fund key programs.
Amid the overwhelming challenges brought about by the recent natural disasters and pandemic, I call on everyone's continued support. Let us remain relentless in our pursuit of Ambisyon Natin 2040. The government assures everyone that it will be in the forefront of this journey.
Equipped with the many lessons learned from this difficult period, we will move forward as one healthy and resilient nation. Ituloy natin ang ating aksyon para sa ambisyon.
From the National Economic Development Authority. For our episode today, we have TFW's Executive Producer live from Lithuania. I thought it was live from London. Mr. Paul Markevicius. Hi, Paul. Welcome. Good afternoon and good morning to you there in Lithuania.
Hi, Agnes. Thank you for that introduction. Today we have two distinguished gentlemen who are on the TFW. I have Commissioner Kelvin Lee, that's the Lee, and Manny SD Lopez. Mr. Lee, Commissioner Lee's from C, and Manny D. Lopez will be talking from an economic standpoint. We had him on last week as a VP aspirant, but today it's his economics intelligence that we're most interested in hearing more about. I'm going to start today's program focusing on the SEC, and it's really a program around what the SEC's plans are moving forward. And there's a touch of irony because my very first question for Commissioner Lee is one that is impacting him directly as we speak, which is, the challenges facing the SEC to try and stimulate growth and overcome the retraction in business caused by the pandemic. Well, as I understand it from this afternoon, Commissioner Lee, you're recovering from COVID and a recent booster jab. So it's fantastic that you're on the program, despite not being 100%. So we are very much appreciative of that fact. Let's look at how do you see these challenges, which are unprecedented. It's an overused word globally as far as the SEC is concerned. Can you talk us through how you see what SEC can do to help stimulate growth?
Well, thank you for that, Paul. And yes, let me preface this discussion today by letting you know that it's not really public information yet, but I haven't been feeling well. I was stricken by COVID earlier in January, earlier this year. So if I seem a little off, I apologize. I'm still kind of recovering, especially after the booster shot. But anyway, let me clarify some points. I'm hoping my internet connection holds. It's saying that's a little unstable, but I hope you can still hear me. But anyway, let me clarify. Good. Let me clarify some points in relation to your question. You're saying that what are the challenges facing the SEC to try and stimulate growth? However, the SEC that question might be unduly attributing to us, the SEC, the function of stimulating growth in the economy. Just to be clear, that's not really our primary function. We have two unique functions. One is the company registrar. So that's like the Companies House in UK, meaning anyone who wants to incorporate a business has to come through the SEC. And second, we are the capital market securities regulator. So we're like the UK FCA, which is the Financial Conduct Authority. Any securities, any stock, any bonds, any mutual funds that want to be sold within the Philippines has to go through our registration process within the SEC. Only duly registered entities with our imprimatur, with our permission, so to speak, can sell these things in public within the Philippines under a full disclosure regime. So these are two very unique functions, and very few agencies in the world have these unique functions combined into one. Most other countries do it separately. So as you can see, based on this very, I don't know if it's exhaustive discussion already, we don't really have the function of stimulating growth. That's more a board of investments, a DTI thing, more an economics thing. However, what we try to do within the SEC is that since we're the company registrar, so people come to us to register businesses and people come to us as the securities regulator to register securities, we try to make it easier. We're currently going through a digital transformation within I don't know if Ma'am Agnes is familiar with this. In case she has incorporated recently, we now have the eSpark, which is like a simplified version of our company registration process. You can do this all online. We even have a subsystem of that called the OneSec, wherein you can incorporate a business within 1 day. In fact, we've had incidents where people were able to incorporate in as quickly as 5 minutes. So those are some of the things that we've been trying to do. We've been trying to go through a digital transformation. We even have SEC Check app. So most of the things that we've been doing is we've been trying to make sure it's much, much easier for you to transact with us. It's much, much easier to incorporate and do things. And if we could just roll out some quick numbers, because we've made it easier, so to speak, in both business registration and in terms of securities registration, we are actually back to pre-pandemic levels of registration. Before the pandemic, as of 2019, we had roughly 2,000 to 3,000 business registrations per month. During the height of the pandemic, it fell to as low as 500, but we are now back to roughly 2,000 to 3,000 business registrations every month again. So that's not bad, even though we are still in the middle of the pandemic. And then we have our securities registrations, all these IPOs. I think you've seen some of them. Despite the pandemic, we've had 8 IPOs in 2021. Some big ones. In 2020, we had Converge, which at the time was the biggest IPO in Philippine history. That was overshadowed very quickly in 2021 by Monde Nissin, which was the biggest now at 59 billion pesos. So, and I guess what I'm trying to say is, despite the challenges, despite the fact that we're not mandated to spur growth, there is growth. There is a robust economy here in the Philippines, ladies and gentlemen. It's still fairly strong. I hesitate to use thriving, but I can say that it is robust. I can say that it is resilient, and it's full of optimism and hope. I mean, that many people registering businesses and securities during pandemic, it's actually unprecedented, in particular with the security side. So from where I'm sitting, there's much to be optimistic about. Sorry, okay, I'll end there.
No. Last thing I want to do is stop you mid-flow, Commissioner Lee. And it's interesting hearing, your clarification. Everybody was affected by the pandemic, whichever way you want to look at it. And of course, it may be that indirectly, you only see what happens as a result of a company or a corporation deciding to list, to register, that they've done whatever they needed to do to prepare themselves as a business entity to then approach you and go through the formal listing process. The interesting thing, I guess, would be what have you witnessed that may be unusual or significant, and it may be within particular sectors that you're seeing, particular emphasis within those companies, or something indicative of this is still stable despite, the worst conditions that have been faced globally. This suggests that as a market to list within and invest within, it has characteristics that are noteworthy. Perhaps you could talk us through what you think are the characteristics that may make it so.
Well, I think what made the capital markets, are the stock exchange in particular, the bonds and all these other securities issuances, fairly popular lately in 2020, 2021 is, well, this is just my opinion, of course. No, I hesitate to say if this is indeed true, but it might be part of the reason. Part of the reason might be it's a little harder to fundraise through the banks lately. No. My understanding is that the banking industry has been much stricter. Some of the requirements has been a little more difficult. Whereas on the other end, we still are strict, but we have been making efforts to try and democratize the market a little bit, to try and make sure people can, still fundraise and still continue to operate well in the securities market. So as they say that the securities markets, the capital market is usually a good barometer, not the barometer, but it is a good barometer at least of how well a country's economy is doing. And I'm happy to say that admittedly, there have been ups and downs with our capital market, but as a general rule, it has been doing fairly well. Even now in particular, we just, I think in the last month, 2 IPOs have just launched. And our people downstairs, the ones who are doing the ones who are doing the securities regulation are actually overwhelmed with the sheer number of people, sheer number of companies that are applying. Even we are surprised. We did not anticipate that there would be such a volume of people applying for real estate investment trusts, for bonds, for IPOs. So it is a very happy surprise for us, as I'm sure it has been a happy surprise for all business people. No? So we're actually looking forward to having perhaps roughly around 888 publicly listed companies by our 88th anniversary in 2025. So I know it's a very high goal to reach, considering we're roughly around 270 plus publicly listed companies currently. But it is something we're looking forward to focusing on, working hard on, to encourage these companies to come in with us and then to list publicly. Sorry, go ahead.
Great. I'm going to just put a question across to Manny Lopez regarding his thoughts on why do we think that the Philippines is so buoyant, contrary to one's expectations that at the most difficult time, you'd expect retrenchment evidenced by, fewer companies listing. And in fact, if we're witnessing the opposite, what does it say about the Philippines? What's your view on that, sir?
First, let me greet everyone. A magandang hapon po sa inyong lahat. To Sir Paul Markevicius and to Commissioner Kelvin Lee, and of course to our lovely host, Ms. Agnes. Isang magandang hapon po sa inyong lahat. In response to the question of Sir Paul, I'm very glad that there is optimism in the area of business registration as well as in the market dynamics as per the report of Commissioner Lee. And certainly, these are indications of economic recovery. Although if we look at the barometers of employment as well as actual comparative economic growth, then there is much to be done to put the economy back on track. Remember, we started in the decline sometime in 2017 in terms of foreign direct investments. There has been a slide in the actual dollar terms, value terms of foreign investments going into the Philippines to as much as 39% decrease. So it's basically a hemorrhage. Now, this is exacerbated by the fact that, economic activity from the point of view of micro, small, medium-scale enterprises, as well as certain key industries, has been affected quite badly by the implications, by the repercussions of the COVID-19 pandemic. Fortunately, we have an uptick in the remittances. It has, I believe, gone back to the 2017 or 2020 values. And well, definitely it will keep on rising. And this is what keeps the economy really afloat. We're talking about more than 10% impact, in terms of percentage of our GNP is generated from overseas, from the remittances. And so there are, I would agree with Commissioner Lee that it's a happy occasion to actually see that there is a remarkable increase in the number of business registrations, as well as in the dynamics of our capital market. But in terms of, say, its impact to the basic welfare and I would say the quality of life of our people, there is much to be done. And I came up with a 3-point.
Okay, can I just interrupt you 1 second there,
Yes.
Mr. Lopez? I'd like to come back to the SEC on the infrastructure developments, digitization, and perhaps we'll look at the economy as a whole in the second part of the program. And I don't want to get a little bit sidetracked on that at the moment, if you don't mind. So Commissioner Lee, you mentioned digitization, and there used to be an expression in the capital markets where it's from trading really, that no good comes from the moment of trading to the point of execution, because the bit in the middle is where human error takes place. And one of the questions that I wanted to put to you, or at least expand on from one imagines digitization helps to remove a lot of the human error in the process, as well as create a more efficient platform for companies to list. Tell me, what was the before and after that you've been able to witness, if it's not too soon to identify that? What were the problems you were hoping to overcome by digitizing?
Oh, sorry. To be clear, the securities regulation side still goes through a sort of manual process, in the sense that we still have people who sit down, review the documents, but they do it electronically. So it's not as simple, because securities regulation is not unlike company registration, securities registration, is not on all fours, tick the box kind of thing. Company registration is much simpler. If you fit all the boxes, you can be released almost immediately. So to be clear, the digitization I was referring to largely focus on the company registration side. On the securities regulation side, the digitization process that we're undergoing there is we're trying to see if we can do it with less face-to-face, minimal meetings, minimal discussions. You just do it through Zoom as needed. You just submit the documents online, things like that. So it's not as automated as I would like, largely because the process itself, as mandated by the Securities Regulation Code, makes it difficult to make it, to use a Filipino term, to make it the decajon box thing. So I hope you understand what I'm trying to get at. But the point remains is that our people have adopted, the SEC has tried to adopt. We are currently undergoing a no face-to-face process since middle of last year, I think, or early last year. So we're trying to make sure that there's less problems, there's less issues with people coming in to talk to us already, and then making face-to-face submissions and spreading this virus. So I'm sorry if that's a simplistic answer, but that's the reality.
And I'm glad you made the distinction, and I think it's almost inevitable in our discussion. The two areas will be confused or overlap. The issues for the corporation and the listed company itself on the SEC. So I'm going to move on to talking about corporate governance, which is one of your roles within your many roles, it seems, as a professional. Can you perhaps just talk us through what does it mean to look to be responsible for corporate governance within the SEC? What does that entail?
To be clear, again, I'm sorry if I'm doing a lot of clarification. Corporate governance is primarily handled by a corporate governance and finance department within the SEC, which I administer. Meaning, I am the supervising. I'm the supervising commissioner of that particular department, among other departments within the SEC. I largely defer to their expertise. So in effect, they are the ones regulating corporate governance within the Philippines. They're the ones drafting the rules that I think you might be familiar with, the Code of Corporate Governance for publicly listed companies back in 2016. Then there's the Code of Corporate Governance for public companies and registered issuers just back in 2019. To be in charge of corporate governance essentially means that we're the ones who create the rules. We are the ones who interpret the international mandates of corporate governance. There are international standards of corporate governance and apply it to the Philippine setting. So, and it is, you would think it would be a simple thing because in effect, corporate governance just means making sure you run the company properly. But you would be surprised at how difficult it can be because of the different standards, the different national mandates. So to be in charge of it means, I guess, reconciling all these things, making sure that the companies also follow the rules and regulations in relation to corporate governance, at least on a comply or explain basis. And you would be surprised that at how difficult and challenging it can be, even in a jurisdiction as relatively small as the Philippines, because of course, compared to other jurisdictions, we are a little smaller. But even then, it is tough. But I'm happy to say that our regulatees, meaning the publicly listed companies in particular, they're very cooperative. There are multiple publicly listed companies I'm very happy to work with. They are very supportive.
So the role that you have within the International Affairs Unit, where you look at best practices across different capital markets, is that what you were referring to just now, where you try and understand how different rules applied in different markets can be incorporated for best practice for the Philippines? Is that
part of
ongoing
it, yes.
thing?
Yes, that is part of the functions, precisely why that's one of the things that was put under my office. We handle coordination with other agencies in other countries. We are, for instance, the ones that deal with there's something called the ASEAN Capital Markets Forum, which is that's like the UN, to simplify, that's like the UN for SECs. So all the SECs in the ASEAN region come together. The International Affairs Unit is the one that handles that, coordinates with all these different SECs. And then they talk about, of course, the different, among other things, the different regulations they have and what we can do to standardize. Because one thing that the ACMF is trying to do, the ASEAN Capital Markets Forum, we're trying to standardize the regulations within ASEAN so that we can make ASEAN as a whole a very attractive capital market forum. A capital market, a market for investors to come in as a whole. Rather than looking at it per jurisdiction, the whole of ASEAN would be an attractive place to come invest in. Is
there a particular model that is favored, which may be from a particular market overseas? Is there a model that you want to embrace where if standardization is going to happen, it's going to be drawn from that model?
It would depend on what portion you're referring to, Sir Paul. If, for instance, you're referring to the corporate governance models, I understand that we are trying to follow the OECD standards. If, however, you're trying to follow the securities regulation standards, we are looking very closely at Singapore, because we prefer to look closely to countries that are nearer us and more similar to us in terms of temperament and jurisdiction and rules. So Singapore is a very good model so far to follow, followed closely by Malaysia. Both are actually fairly good jurisdictions to follow, fairly advanced in these fields. So in particular, I have been to Singapore multiple times as a commissioner and coordinated with our counterparts there. They're called the Monetary Authority of Singapore, MAS. And I find them very good to work with. And I've enjoyed collaborating and coordinating with them in terms of these standards.
Have you noticed, while we're focusing on the Asian markets, is Singapore somehow the beneficiary of what's happened in Hong Kong as far as a retraction in the market?
Well, I have heard of that, but I'll be frank, I have not quite studied that, Sir Paul, because I haven't quite, that has not been a focus of my, there's really a lot on my plate. So if it's not quite something I need to focus on, I try not to. But I admit that there have been people who mentioned it to me, but only on an anecdotal basis. So I cannot point you to any studies that I have read or seen that would agree with what your hypothesis. But I think it's plausible. With all the troubles that Hong Kong has had in the last few years, it is likely that the next logical jurisdiction for them to go to would be Singapore, I think. Whether or not that is the case, I cannot tell you definitively.
Well, I recall from a previous role I had within financial services, discussions with the London Stock Exchange, who were trying to help a certain country in Central America, who I won't mention. They could only get so far to help them set up their exchange because they weren't really able to comply with the disclosure rules. And so it's like you can only be helped so much if you're willing to be helped and you believe in transparency. So we look at the two big pieces of legislation that we are now have enshrined within our best practice, which is Sarbanes-Oxley and Dodd-Frank. I'm about to ask you a question which I'm anticipating you may say yes, but we have my corporate governance guys that handle that. I don't get involved. Have you had any exposure to what may, let's say, be the better practice as a result of those two acts, those two specific pieces of legislation? Have you seen the benefits yourself?
It has had a large influence. You will recall that the Code of Corporate Governance that we are applying now, a lot of their principles follow largely what is enshrined in the Sarbanes-Oxley Act and the Dodd-Frank Act. For instance, the requirement for in the structure of audit committees, management's responsibility over financial statements, internal controls, other disclosures. These things that were mandated by those laws are actually largely applied now here in our different codes of governance. And I attribute that largely to the fact that they were mandated abroad, in these other countries. In effect, this is slowly becoming the international standard, I believe. Sorry, not slowly, but it is, I think, in a way, becoming the international standard, the Sarbanes-Oxley and the Dodd-Frank Act. And it is slowly being enshrined in a lot of these different rules all throughout the world. Even we've done that, I believe. So something I can point you to would definitely be our codes of corporate governance, and you can take a look at.
Okay. Well, you mentioned the corporate governance code earlier. Is the code working in the way it was intended? Are there any planned amendments?
There are always planned amendments to codes like this, but I want to say that in particular, the Code of Corporate Governance for publicly listed companies has been doing quite well. Our publicly listed companies, the ones that are listed in the Philippine Stock Exchange, have been very compliant, largely very compliant, and they've been working hard to follow all our requirements. The other one, the recent one in 2019, the Code of Corporate Governance for public companies and the registered issuers, meaning the guys who register securities and bonds, but not necessarily on the Philippine Stock Exchange. So that's a different category. That one's a fairly recent one. I'm still waiting to see how that will go because the compliance for that started only in 2020. So we're still waiting for the studies and feedback on that. But definitely there is some room for improvement. There's always room for improvement in any of these things. So, but we're not quite there yet to mandate changes, at least not from where I'm sitting. I hesitate to make large changes so soon.
Well, I read that when the corporate governance code was introduced, one of the pushbacks was the one thing that has been leveled against the family-owned conglomerates, that there's a level of protectionism that takes place, and the pushback was the fact that it was actually impinging on these same entities' ability to maintain the status quo. Do you have any thoughts on that?
Well, no law, no regulation, no code will ever be without any criticisms. I don't quite. I'll be the first to admit that I have heard that kind of criticism as well, but I don't quite see it from where I'm sitting now, no, at least currently. At the end of the day, these codes, they're not exactly mandatory. They follow the comply or explain approach. So you have to apply it if you can apply it, and then you tell us if you can't apply it. Effectively, that's how it works for comply or explain. So I don't think it allows for protectionism or anything like that, or sorry, what was your word for it? Favoritism or anything like that. If any case, I find that sometimes they aren't happy that we are imposing so many new rules on them, is what I find. No? Some of these family-owned conglomerates are, I mean, any bigger entity is usually unhappy if there are new rules that apply to them that they have to comply with. No, I think that's a given. But in fairness, they have tried their best to comply from what I've seen. The submissions of some of these bigger corporations continue to be I don't want to use the word good, but at the very least, they continue to be compliant. Perhaps that would be a better term.
Well, I'm going to move the question over to Manny Lopez with a slight rephrasing. I think the issue of family-owned conglomerates. Well, it is the nature of the Philippine market. It's not unusual. It's very specific and peculiar to the Philippines. So that is how corporations have developed and are run. I think where the problems may come from is when and how levels of legislation may enable more foreign direct investment to have a greater impact on the piece of the pie that the family-owned conglomerates have. Manny Lopez, is that a fair statement? What would you say?
Certainly, legislations can influence the flow of foreign direct investments, and including local investments. And legislation such as one recently performed in favor of the Securities and Exchange Commission. There is a law that provided for certain reforms on the matter of national corporation, corporation registry, as well as in the course of managing our capital markets. There were certain improvements. And but I think Commissioner Lee was quite frank and honest to cite that SEC has a limited mandate in the manner of influencing the course of economic policy and events in the Philippines. Although I must say, any improvements in the way we do business, any incremental improvement in the ease of doing business will be beneficial for the advancement or for the attraction of foreign direct investments. Although I think the bulk of influence that could possibly impact foreign direct investments will be in our Omnibus Investment Code, which is a primary consideration in my three-pronged strategy to help make economic recovery more efficient and more democratic here in the Philippines in the face of this unprecedented global crisis that we are facing.
Manny, one of the things that I picked up on as far as FDI, and I think it's being worked on as we speak, and I think Duterte's government is trying to get this in place. I may be a little bit out of touch with what's physically happening, but I understood that there's legislation involving the amendment of three laws: the Foreign Investments Act, the Retail Trade Liberalization Act, and the Public Services Act, to make FDI less restrictive in the Philippines. Do you have an update on that, and what's the picture on that?
Yes, actually the Foreign Direct Investment Act of I believe it's 1997. They are trying to effect some amendments to this, and among the improvements or intentions, really, the most basic is economic charter change, where the requirement for 60-40 consideration in the manner of formation of companies will subscribe or will be amended to allow 100% foreign ownership. That would be a very crucial factor in the attraction of foreign direct investments in the Philippines. And other than this key measure of liberalizing foreign equity ownership in terms of company formation, there are also areas of improvements that could be introduced, such as the allowing the repatriation of profits by foreign investors based on the market value of or the based on the current foreign exchange. Because under the old law, whatever investments that goes into the Philippines, when the profits are repatriated overseas, it will have to be converted in the same currency and in the same rate that it was originally brought in. And as we very well know, currency changes differ over time. So I think this is one key amendment that we have to address.
Well, thank you for that. We're going to pick up on that after the break. I just wanted to come back to Commissioner Lee because I saw you nodding your head. There may be some points you just wanted to pick up on.
Well, I agree completely with Sir Manny that these things, the Retail Liberalization Act, the improvements. I use the term improvements. I personally think they would be improvements. If they are passed, if they are signed into law, hopefully, they would definitely make things business. I think they would definitely make attracting foreign business much easier because from where I sit, we have had many instances where when people would ask us informally for advice on a foreign entity coming in to do business, we would have to explain to them, no, under the Public Services Act, you can't come in doing this, you can't do the 60-40, you can't do that because the law doesn't allow that. And then they invariably come away disappointed. With these amendments in place, hopefully they'll pass. I foresee much more foreign direct investment coming in. But take note that that's my personal opinion. That is not an endorsement of these laws. I don't think I'm allowed to do that.
No, and I'm fully aware, and the program viewers are fully aware that you've just expressed your own view there, and not the view of the SEC. Just for clarification, I mean, some might say that the perceived barometer of a mature, healthy market is the level of foreign or overseas investment, and the way in which that's reflected on the companies that may be listed and the percentage of foreign ownership in those companies. We have an election coming up, and it may be we have a bit of a sea change as regards these very subjects for reasons that may be obvious to the outside world. The Philippines needs to position itself for growth as a competitive marketplace within Asia and globally. We're going to take a break now. We'll be right back. Don't go away. And Agnes, over to you.
Every day, the Philippines does more than wait. putting together new adventures. And experiences for you to try. We're making our sites better for you to see. Cooking up new dishes for you to taste. And preparing cultural discoveries for you to feel. And we're not stopping. Because we know that you deserve more. We can't wait to welcome you.
It's more fun in the Philippines. Bakit palalayo? Sobrang pwede kayo.
Welcome back, and you are still watching with us live here in the Filipinos World. Again, we'd like to invite the OFWs, the overseas Filipino workers, and foreign tourists who are interested to come over here in the Philippines. You are welcome by 10th of February to visit the Philippines and enjoy the scenery. But the condition is you should have a fully vaccination. All right, Paul, still with us live here in the Filipinos World, the SEC Commissioner, Attorney Kelvin Lee, and the Economist and Vice Presidential Aspirant, Mr. Manny SD Lopez, together with Mr. Paul Markevicius. Paul?
Thank you, Agnes. Yes, it's actually very heartwarming to see the Philippines able to promote itself as a destination, through the hardest period of the pandemic, when it was just not physically possible, and everyone knows how important tourism is for the Philippine economy. So I'm very happy to see that announcement, and I do encourage everyone to take advantage of Agnes's offer to come and visit her in the Philippines. Very generous. So we're going to come back to the subject of what makes the Philippines an attractive location within the Asian markets for investors, for companies, for overseas investment. But I want to just maybe continue allowing Commissioner Lee to tell us more about some of his specific areas of responsibility, which cover, the ICT, the fintech community, areas that, the world is actually poised to respond to as a key growth area. And I know you're not responsible directly for growth, but, tell us about your role in these sectors as far as it applies to the sector itself.
Thank you for that, Sir Paul. Actually, the fintech one in particular has been the term for it, has been the sexy industry lately, because everyone has requested a meeting with the SEC and the commissioners lately. The last 6 months has been either connected to or has something to do with fintech. It's a very exciting field. It's very vibrant. And I'll be the first to say that I'm actually looking forward to this being implemented very well here. Fintech in particular, however, is kind of difficult to, for those who are not familiar, I just realized not everyone might be familiar with fintech. I'm just so engrossed in it. Fintech is financial technology. So financial technology is the terminology we use for all these kinds of businesses or companies or technologies which can make financial transactions easier. And included under fintech, the ambit of fintech would be cryptocurrencies, would be these NFTs, these things like that. And it is the position of the SEC that these being a form of securities, they fall under the SEC's ambit. And that is why we are so interested in fintech, is because it is new, it is very vibrant, and it actually has the possibility of changing how business is done, not just in the Philippines, but worldwide. Singapore has their own innovation hub. The US SEC has a whole department dedicated just to fintech. I understand the UK FCA has done the same. And in fact, a lot of my international engagements, aside from corporate governance, has been on fintech. So it is something that has a large possibility of changing how we do business in the Philippines. In fact, I'm sure you're aware, crypto, digital assets is a very exciting field. A lot of people are claiming they got rich very quickly from that. I'm just worried, we in the SEC are just worried that some of these things might be scams. So precisely why we have to focus on it as well, to make sure that the consumer, the customer interest, the investor protection is also, the interests of investors are also protected. I don't know if that is a sufficient enough background there on fintech as an industry. I give a lot of speeches about that in case you're, and a lot of talks explaining how it's so hard to regulate this, because at one hand, we have to be strict to protect the investors, but we don't want to be too strict that we will discourage fintech companies from opening and operating within the Philippines. So, and you'll notice we haven't issued out our digital asset rules as a result of that. So it is a challenge. It is hard managing the two. But we're trying our best.
And you know, it's very encouraging to hear the emphasis being placed on this significant growth area. Mm-hmm. But you've kind of, you know, hit the nail on the head as far as what's enabling is also disabling when you try to walk that line, ensuring that, you know, corporate governance issues are maintained at all times, and you're not inviting fraud and risk into the marketplace. So far, you know, what would you advise as the watchwords for, you know, how to make this area grow? Because everyone will be facing the same issues as far as, you know, fraud, and it's true of many new innovations that, particularly in financial services, the people creating the models are often smarter than the regulators. No disrespect to the regulators, it's just the nature of the bit. You're laughing. I'm glad to see.
That is true. That is true.
You know, it's like we're playing catch up to put in place some rules that outsmart them. Mm. And yet at the same time, you know, nobody wants to stop innovation, but somebody has to be there to ensure that, you know, the consumer, the investors' interests are safeguarded. What's your thoughts on that? Because you're still at a very steep learning curve as far as being able to manage the confluence of these different issues.
Well, bottom line is we are trying to be careful. We are trying to make sure that we don't unduly stifle the market, because within the Southeast Asian region, within ASEAN, there is not yet a clear leader on which country is the preferred choice for fintech companies. Some people are saying it's Singapore. Some people are saying it's Indonesia to a certain extent, Bali in particular. Some people are saying it's us in Manila. And if you look at the sheer number of fintech companies that are incorporating here, it's possible it's us. But the minute whether we, the SEC, start regulating them more strictly, or our fellow co-regulators, the BSP, the Bangko Sentral ng Pilipinas, our central bank, by the way, regulates the digital currency side of these things, among others, and the electronic payment schemes. The minute we all start being strict about it because of consumer protection, we might drive away all these investments. So I guess the balance is very hard. And perhaps on let me focus instead on the consumer side. Perhaps if I could just invite our OFWs, our consumers, our viewers, that before you invest in anything that is crypto related or digital asset related, please check. Please do your due diligence. Don't just invest because it's exciting. Don't just invest because it's Bitcoin. Don't just invest because it promises 20%, 30% returns immediately. In short, if it's too good to be true, don't get into it. Not immediately. At least check, please, because otherwise, there are currently we are having some difficulty protecting some of our consumers precisely because they invest in these things without realizing that some of these companies are not even incorporated in the Philippines. They might be incorporated elsewhere. So they are left with very limited venues to try and get their money back, to try and get recourse, to file cases. Even that's a problem. That's why we come up with advisories reminding everyone, please do your due diligence. Try not to invest in entities that are not necessarily registered in the Philippines. Otherwise, you have minimal protections under Philippine law. You'd have to file the cases in whatever country is registered that particular fintech company is registered in. I apologize if I'm getting emphatic about this. I get a lot of complaints about crypto abuses, so to speak. So it's a touchy subject for most of us here. No, we try our best. But we get
may I just interject on
I'm coming to you, Mr. Lopez.
thought,
I would like to hear your views on this dynamic area fraught with lots of risk-related issues.
Yes, well, a new omnibus investment code, I believe, is the general trigger for improving on the way we do business in the Philippines, including securing certain new industries and promoting their possible applications in this country. And as you very well know, our Omnibus Investment Code of 1987, was written over 30 years ago. And during that period, globalization was not as significant as far as our economy is concerned. There was no such thing as a digital economy. And so a new Omnibus Investment Code incorporating the ideas that was just mentioned by Commissioner Lee in enhancing the prospect of developing financial technologies here in the Philippines is, of course, would have a better chance of success once we have a new Omnibus Investment Code that would align with all the requirements from regulation to enhancement to actual implementation in this country. And on top of that, I must say that I have to make some clarification with regards to corporate ownership. While it is true that as a standard, the Philippine Constitution prescribes 60-40 in favor of Filipinos. But in special economic zones, 100% ownership is possible, okay? As a matter of fact, it is now the rule. And with regards to the restrictions on certain types of industries, particularly retail and arms manufacturing, as well as mass media, these are all in the negative list of foreign investments, which is understandable. But overall, the Philippines is right as an investment destination for both manufacturing as well as services, including new technology-driven services. Because number one, we have a literate, population that is still relatively very competitive, I must say, compared to the emerging markets as well as with the matured markets. And these are, I would say, these are some of the key components that would be attractive to foreign direct investments, and of course the new developments that are upcoming, the liberalization of entry of FDI, as well as the ease of doing business, and I must say the remarkable improvements in peace and order, as well as the expansion of the Philippine economy as driven by the Build, the infrastructure program. So putting all of this together with our persistent, income, our consistent flow of remittances from more than 12 highly productive Filipinos overseas, that will keep our economy, in the, I would say, in the forefront of economic growth and recovery in Asia.
Let me just try and amplify the pulling together of these different strands that you've just referred to. And if we look historically at markets around the world, we talk about emerging markets, and those markets have associated risk with them, which the mature market is averse to. We try not to overexpose ourselves to those markets because, frankly, they don't have the regulatory infrastructure typically or the maturity to avoid the level of risk that would satisfy the corporate governance regs within those companies. As far as the Philippines is concerned, we've got you're pivotally placed as a very attractive location as far as the US and China are concerned, looking at the relative numbers of investment from each of those countries, geographically also. So there's a lot that Philippines has to offer and can gain from. The question is, out of all the different things, and the fintech is a good example because there's no legacy systems holding back fintech other than the innovation technology itself and the regulatory infrastructure that's there to support it without introducing fraud. What would you place in the list of priorities for the Philippines to ensure that they can be seen to be the fintech hub for Asia? Manny.
Well, definitely we need to do a lot of stitching up. For one, our educational system will have to be aligned with the industry requirement. And along with that, our local policies, legislations on the local level, as well as in the national realms, will have to be aligned with specific industries. And at this point in time, what I could possibly think of is the marketing of the Philippines has not been as effective, to the point that we could surpass our regional neighbors. As a matter of fact, comparing the fiscal incentives as well as non-fiscal incentives offered by Vietnam, there is not really much difference with what the Philippines has to offer. But the Philippines somehow is now lagging behind Vietnam in terms of attracting foreign direct investments, more than 2.5 times to 1. So I think the area that requires improvement in that aspect is basic marketing. And true enough, we will have to leverage on information and communication technologies and our ability to communicate globally in English as among the advantages that we could really leverage on. Because in terms of fiscal and non-fiscal incentives, we're basically at par. And if you go down the line in different, in a deeper analysis, the cost efficiency of locating in the Philippines vis-a-vis Vietnam, plus the conveniences of, going anywhere in the Philippines, you wouldn't get lost because almost everybody speaks English. And of course, we have better beaches and better resorts. So many of our Japanese executives, when they come over, they would prefer Cebu as one of the destinations to locate their factories, because right after work, they can go straight to a resort or to a golf course and enjoy a nice competitive game of golf. So these are the advantages.
I heard that the Japanese don't leave. They stay there on the golf course long after the meeting finishes.
Well, and the resiliency of Japanese investments here, of course, there are other factors that keeps them here. One is the ecosystem that they have developed. When Toyota came in, they brought with them, the upholstery manufacturer, the engine manufacturer, the tire manufacturer, et cetera, et cetera. So there is I would say, an integrated approach that makes them really very competitive globally. So Toyota here is number one in the local market, and they're exporting. They're not as affected as the other companies who have not adopted the strategy of developing an industrial ecosystem. And fair enough to say that here in the Philippines, they're enjoying those benefits. And they're creating jobs. They're contributing to our foreign currency exchange. And of course, after their tax holidays, they would be paying quite a bit of, more taxes. And that should propel our economy upwards.
Well, talking about the economics, the Philippines was experiencing year-on-year growth pre-pandemic. Sadly, that's not the case now. And when the dust settles, we'll look across certain metrics and say, what makes Philippines attractive domestically for the domestic market, and what makes Philippines attractive for the overseas investor at a corporate level, because we'll see the numbers. And one of the key issues facing the global market is the shortage of trained personnel. Everybody wants the same people in the same sectors, and it's the same shortages more or less. Somebody has to get there first. We saw how India became, a center for outsourced labor. Mm-hmm. The relatively new infrastructure, the innovation of technology means you can set up anywhere if the infrastructure is there to support you, and you can be the first. And it comes back to more or less the same question, what does the Philippines have to do to be the first within Asia? So it doesn't go to Vietnam, doesn't go to Indonesia, doesn't go to India or China. And there is enough to harness that investment, not just from overseas, but to build and grow, because the economics make sense. Let's just put that back to Commissioner Lee, wearing maybe his non-SEC hat to answer that economics-based question.
I was actually expecting Sir Manny to take that question.
I'm going to give it back to him. Don't worry.
Offhand, Sir Paul, on my end, coming from a family, I'm actually the first in the family to be a lawyer. I come from a family of businessmen. I'm also the first in the family to be a government official. So we have business ties from before, and I would think that my experience with the family in terms of business is that we are always looking for a very good regulatory environment, a fair one, one where it's easy to set up the company, to do well, and to continue to operate. So and I would think the Philippines has been largely successful in terms of that, because we have risen in the ranks of the ease of doing business rankings. I don't know if you're familiar with that. There was a World Bank ranking. They recently stopped doing it because of an internal scandal. But previously, under the World Bank rankings, I think we went up from 130th place out of 180 countries. We're around 70 something already. So it was a very, very high increase on our point. So I think that's one thing that I would think that would help all these other foreign investors to come in and do business. But take note that is from a perspective of someone who's not really an economist. So that's my personal opinion. That's basing it on a family thing, that we just want it to be easy to set up the business. We just want to do business, earn our living. So please make it easy for us, government. That's kind of the thinking, and I would presume that's how other people think as well, when they're coming into a country.
Okay, thank you, Commissioner Lee. So Manny, I'm sitting in a country, tiny country, less than 3 million people. They have specializations in telecommunications. So from zero, they've created a marketplace where they are considered to have expertise, and that expertise is translated globally. They can offer that service to any third party in any part of the world, and they do, which is fantastic. However, they don't have enough of them to do that thing. There's not enough physically, in existence, trained personnel. So it comes back to the question I asked you earlier, which was, how does the Philippines ensure it can take advantage of all these other elements that are lined up nicely for growth if it still doesn't have sufficient numbers of trained personnel in these key sectors?
My broad answer to that, Sir Paul, is I came up with a 10-point socio-economic development and political reform agenda. And a number of these points that I raised address those concerns, including, quality education, quality education that is aligned with our economic requirements, industry requirements, that is aligned with our national development goals. And with that, I think the area of developing the necessary skilled workers and expertise could be expected in a relatively short span of time. As a matter of fact, way back in 2017, when I was hired when I was invited as a consultant of the Philippine Economic Zone Authority, I was already, suggesting that we improve on the old omnibus investment code to make, doing business in the Philippines better, easier, develop local productivity, local expertise, among others. And we are moving towards this direction until the pandemic hit us. And I wish we could have done it faster, quicker, so we could possibly realize, the gains of a new, better aligned omnibus investment code with, the new global standards, with the new global requirements. How I wish we were able to do that. But nonetheless, that is the direction that we will be pushing. This is one of the reasons why I'm trying to put my hat in the political ring, because, in Philippine politics, you can do more if you're a politician, more so if you are a progressive politician espousing progressive policies that will benefit the national economy and our people. So with that direction, I am very confident that from a ranking of number 5 or number 6 in terms of attracting foreign direct investments, we could improve, perhaps overtake Malaysia, Thailand, Indonesia, or even Singapore.
I think your phone, Manny, is interfering with your signal. I think your mobile phone may be interfering with your internet signal.
Yes. Can you hear me better now?
That's better.
Okay.
I'm very encouraged to hear you say, and of course, it goes without saying from Commissioner Lee, that the emphasis being placed on the code, on legislation as the enabler, and it's a marked difference between the mature market that can actually develop and handle growth because it has the infrastructure in place to do so, as distinct from an emerging market, which is still in a little bit kind of like trial and error. And the world is too small in terms of speed of investment for that kind of exposure still to remain. Mm-hmm. So I'm very encouraged to hear you emphasize that. There's also, emphasis that you made in one of your earlier remarks on the free economic zones. They offer significantly different opportunities for FDI, and perhaps you can talk a little bit about how you see them making a difference to perhaps overcome some of the residual hurdles, which may be, regulatory in nature. It's just you've got a blank sheet, you've got an open field for the hungry foreign company to come to a location in the Philippines, set up an operation, set up a manufacturing base, and know they can hold on to the bigger part of their profits for all the right reasons.
Well, I have analyzed on the decision process involved in deciding where to locate the next factory or the next regional headquarters from the standpoint of an international executive, being one myself in the past. Now, the way they do things now is they don't jet into the country to check on the specific details on why they should go to the Philippines instead of Vietnam or Thailand. And one of my suggestions was to make our presence felt in the area of, financial technology or investment technology. So I have proposed that we leverage on, on these new technologies to actually impart the benefits of locating here in the Philippines as a business development tool. But, unfortunately, some of our officials, especially those who were appointed because of, political considerations, they are fond of traveling. They would rather go visit Japan to offer the Philippines as an area of destination rather than go online and try to capture the business and fly there when they're up right for signing, or perhaps invite the investors to come over. So these are small things that needs to be addressed, but at the same time, they're quite significant if you put them all together. So I believe the new government, should we have a reasonable degree of influence when it comes to the attraction of foreign direct investment, we could stitch this up and make the Philippines a better and a more competitive destination, because all of the ingredients are there. It's a matter of putting them together. As a matter of fact, SEC, I must admit, is one of the leading proponents of new standards of efficiency. I could see that because of the recent 2019 legislation. They made things a little bit easier. Now, in the area of actual implementation, there are certain improvements that need to be done. And it's a matter of stitching things, small policies together. For example, the provision of, let's say, tax holidays from 5 years to 7 years to 10 years. If we can only come up with actual, basis for the extension, so you don't have to deal with the bureaucrats who, may be too busy to attend to you on certain occasions. And they would have no choice but to extend an extension for your, say, tax holidays when you really need it. And we have to be realistic as well. There are key industries, such as an integrated steel mill, which until now, the Philippines does not have one. Of course, a 5 to 7 years grace period would not suffice. But if automatically you could provide probably a new steel mill investor to come in with a 10, 15, 20-year tax holiday, it will not cost us anything. What we will benefit is a new steel mill with a little kinking, a little stitching of the current policy. So that's what I'm saying when, certain amendments could be made to make the Philippines really a nicer and a better and a more competitive place to do business. And that will come with the new Omnibus Investment Code and perhaps with Manny Lopez as their vice president.
Okay, thank you for that. Very small p politicizing at the end of your presentation. Very appreciated. But large E economic focus.
Yes.
I'm going to ask for some closing remarks. We're going to coming to an end for the program. Commissioner Lee, any last thoughts that you'd like to share with our viewers? Anything you think that perhaps you didn't give enough focus to? What's your parting words, sir?
Well, if I may, Sir Paul, I go back to the point I made earlier about fintech, about it being an exciting field. I encourage everyone who wants to get into this field, please do your due diligence. I cannot emphasize that enough. The sheer number of complaints that we receive here about people complaining about being shafted or being how do we say, about being scammed by particular fintech companies that claim to be fintech. it's unbelievable. So I emphasize in particular, since I believe this show is more dedicated to OFWs. Please, to our friends there who are watching now, please, before you invest, before you go into any form of fintech, before you borrow any money from digital lending apps or anything like that, please do your due diligence, check with the SEC, check with the appropriate government agency before you go into that. Perhaps that would be something I want to emphasize, and I hope everyone will try to take heed. Thank you.
That's very important closing statement for our viewers, and perhaps there are documents that I'm sure they can find to back that up. What are the rules of thumb to go to, and it may be that within the SEC. Is there something you can direct them to, Commissioner Lee?
Yes. Sorry, they can go to our website, the www.sec.gov.ph. We have a full database there of the applicable rules and regulations. We have there all our advisories warning the public about particularly problematic scams or problematic companies. We also have a listing of the online lending apps that are registered with us. If it's not registered with us, please don't transact with them, things like that. So www.sec.gov.ph. Thank you. Okay,
wonderful. And Mr. Manny Lopez, your closing remarks, this is not running for VP right now, but as far as we'll have you back on the program, I'm sure, for economic growth within the Philippines. What would be your focus, sir?
Well, based on the 10-point socioeconomic recovery agenda that I have made, these are based on actual empirical observations of our present situation, the exacerbated, the challenges that we are now facing. I believe we badly need a new omnibus investment code to make things to make business easier here in the Philippines. We need a streamlined bankruptcy law because there are many companies that will require, a legal framework that will enable them to recover, to reorganize, and get back into business. And lastly, as we very well know, without any source, without a source of low interest loans, most of our struggling small and medium scale enterprises will be unable to get back on their feet and rejoin the economic activities and generate jobs and opportunities for everyone. So this three-pronged economic recovery program is very vital in effecting economic recovery and growth in the Philippines. And I am very hopeful that any administration will embrace these three strategies because it is what we need to put the economy back on track. Help our micro, small, and medium-scale enterprises, enable them to recover, and the broader economy recovers.
Okay, wonderful. I'm just going to close now with my little bit of summation, which, I'm picking up the fact that whatever happens, there is a requirement to be innovative at the government level, at the regulatory level, to understand what the government needs to do to, oil the wheels of of our industry, of the machinery. And those rules may not exist right now. And if it's a relaxation of some rules to allow greater FDI, so be it. But, new situations require new solutions. And on that note, I'd like to say thank you to our guests today. Commissioner Kelvin Lee, I wish you the best health, sir, moving forward. Thank you for your time. I look forward to seeing you again on the program, perhaps in the future. Manny Lopez, always a pleasure, sir. Thank you and contribution. Look forward to talking to you again. So I'm going to hand over to Agnes. But thank you so much, gentlemen, for your time today.
Thank you very much. It's my pleasure.
Thank you.
Thank you. Thank you.
Thank you.
Thank you. Thank you. Thank you. Thank you so much.
It's more fun in the Philippines. Bakit palalayo? Sobrang swerte kaya ng tsinelas mo. Nakatapa ka sa paraiso. It's more fun in the Philippines.
The Philippines.
Yes, I will.
Welcome
I'll look
back.
forward
You're
to-
still watching with us live here in the Filipinos World. That was very deep and mind-boggling topic or discussion. But you know what, Paul? One of the things that I really learned from Commissioner Kevin Lee and Economist and BP Aspirant Manny SD Lopez is that the Philippines is so open for the foreign investors to come over in the country, and the opportunity for them to have their businesses be be put up here is more likely a possibility. That I don't even know what happened to the 100% ownership of a business or a company when it has to be established in the Philippines. That's something that
It's a law.
may be
It's a law.
discussed later if that bill or particular bill has gone into law now on the 100% ownership of the foreigners. For suggestions, comments, feedback, please get in touch via our email, thefilippinosworld@gmail.com. You may also follow us on Instagram, Facebook, and YouTube channel, The Filipinos World. If you want to become one of our sponsors, please send us your intent via email, thefilippinosworld@gmail.com. If you want your story to be featured in the Filipinos World and you believe you are one Filipino to inspire other Filipinos, please let us know and write us an email via thefilippinosworld@gmail.com. We wish to thank all our guests for today: Securities Exchange Commissioner Attorney Kelvin Lester Lee and the Economist and Vice Presidential Aspirant, Mr. Manny SD Lopez of the Labor Party of the Philippines, for gracing here in the Filipinos World. The Filipinos World would like to thank also Mr. Paul Markevicius, our Executive Producer, Dr. John Artistiope, Technical Staff, Mr. Deo Malinaw, kaagapay ako ng OFW KSA, ako, Bakpit Incorporated, and our supporters and viewers of the Filipinos World. I'd like to say special hi to Miss Marichu, Martin, and Mary Ann Madriaga watching with us. Thank you so much. Paul, it's for you.
For this, we say we bring the Philippines closer to the world. We bring the world closer to the Filipinos, and Filipinos closer to each other, and possibly me in the future.
That obviously, thank you, Sir Manny, and good luck to your vice or your candidacy. Best of luck to you. This is being the TFW Agnes, along with our executive producer, Mr. Paul Markevicius, live from Lithuania, Vilnius, Lithuania. Thanking everyone for watching with us here in the Filipinos World. Goodbye, everyone. Have a safe weekend.
It's more fun